My oh my, oh my, oh my. I think I have synthesized the question. These are money recovers for the examples. Also gonna post this thing here. Mm, okay. Yo, yo, yo. Hello, welcome. Good evening. Um, I started the live stream this morning, and this is just a recap of. I'll just be doing a quick recap of what I talked about in the morning, and then I'll show you all some few chart examples, some extra chart examples. Um, what's this? So let me. What's this? Um, all right. So talked about is this even airing? Is this airing? Hold on. TikTok Studio. I think I will do this. No, I think I can stay where I can post this on here. So this works, and I can post next, next, next. It's gonna attach a sticker to this. Just text stickers, and I'm just gonna add a link to this. So, how do I do this now? I think it's this. Anyways, I was going to just make a quick post, but I think I need to figure this out to YouTube. All right. I'm just finding it so difficult to do this. Anyways, um, it's gonna be up here. Right. Why is this so difficult, bro? Why? Why? Anyways, let's just start. I just hope you all can hear me. So the live I did in the morning, I watched it again and I was seeing a lot of issues. Like first of all, it was now the background sound was way higher than like it was just you know it was equally as high as what I was saying, and that's the video quality was even some type of way, and I'm trying to fix that. So for now, this is all we have, and I'm just gonna okay, I figured how to do this. So I'm just going to Oh, yeah, this works. So, like I said, I was just going to go over, what I thought in the morning, and I think I still have my charts on. Yeah, this is 14th. Yes, this is fucking. Let's see, it's live now. I think. Mm, how do I even do this? Okay, so we said the market either moves up or moves down, right? And then when it's moving up, we say it's a bullish market. And then when it's moving down, we say it's a bearish market. And what you want to do when the market is moving up, you just want to take buys, okay? And how do you how do you even identify when the market is moving up, right? It's just like when you're going upstairs, you use the staircase, and then you're making, you're taking small steps that eventually swings you to the top of the staircase. All right. So yeah. So that's just how it is. So that's when you see things like, which is a typical characteristic of a bullish market, which is an uptrending market, is the market makes a high, it comes down to make a low, but the low is now higher than the previous low. So we'll call it a higher low. And then it makes another high higher than the previous high. We call that a higher high. So it keeps making series of higher highs and higher lows and higher highs and higher lows. So when we see that, the moment we see that, spot that in the market, we know this is a bullish market. All right. So that's that. And then I mentioned, you know, certain key attributes and how that becomes very important in the future. So when the market starts, let's say the market starts from this low. Let me use this tool thing illustration. Because the market starts from this point, right? Clear from here, and then it swung up, right? This is a high, and then the market came down. So the point where the market moves up to break this high, we call that low a strong low because it's strong enough to break above the previous high. Okay, while the high is called a weak high because it's not strong enough. So this is all about comparing the strengths of the lows and the highs. So whenever price can push from the low and break above the previous high, we say that low is a strong low. So we have in an uptrend we have I'm just going to text it out here. Characteristics of a bullish market to have higher highs and higher lows. This is supposed to be higher lows. We also have weak. This will be weak highs and strong lows. All right. Then we also have. Okay, so this is all. This is all. These are like two characteristics of a bullish market: higher highs and higher lows, weak highs and strong lows. Because the lows are always strong enough to break above the previous structure. So you find this is what we mean by break of structure. When price breaks above like this, it breaks takes out the high, creates a higher high. Okay, and then what you want to do is at every point in this low, you want to be taking buys. Taking buys. So if you take a buy here, let me use this tool. You take a buy here, you target the previous high, you're going to make money. All right. If you take another buy here, stop loss below the previous below the previous low, you target the recent high, like you target this new high, you're going to make money because it's expected that price is always going to break above. All right. And I talked about stop loss and take profit orders. These are basically your own way of programming the trading platform to cut your losses when price is coming against you. So if you say price is going to go up from here, as in this case now, you take a buy position here and it's going in your favor, right? You say it's going in your favor, and at some point it starts coming against you. What the stop loss order does is whenever price comes down to this point where you set your stop loss to be, it's going to close the trade. So you don't keep bleeding money from your account. Okay. While the take profit on the other hand typically just tells the program that when price gets to this point, close the trade and take my profits, send my profit into my account. That's just what take profit and stop loss does. So this just helps secure your profit and protect your capital, basically. All right. So when you, I think I should see, okay, what's this? Um, all right. So that's for bullish. That's for the bullish market. While in the bearish market, let me copy this. In a bearish market, you get the opposite. You have lower lows, and lower highs, right? And then you have strong highs and weak lows. Okay, all right. And I'm going to explain. So the market starts from the top. Let me just quickly. If you can hear me, hurry. All right. Okay. Okay. So the market started from this point, this high point, and it's down. Okay, it swung down to this point, creating a low, and then it went to the top, creating a high, but this high is now lower than the previous high, right? So from the previous high, which is a lower high, like I said, it's going to be making higher highs and higher low. When did I reduce this thing? It's going to be making lower lows and lower highs. So every low is lower than the previous low. This low is lower than this previous low. This high is lower than this previous high. So the number one characteristic of a bearish market is the formation of a series of lower lows and lower highs. So it's just like walking down the staircase, right? So you keep making, taking it one step at a time, but eventually it takes you down. And each step you take is lower than the previous step, right? So that's just a really, really good analogy to think about this thing. And then we have weak lows. So each of the lows are weak, right? The highs are stronger. That's why they're able to push. They keep pushing price down. So every high that is created pushes to break the previous low. So this is the opposite difference between the bearish market and the bullish market, right? And this information becomes very, very relevant when as we progress in this um, stream. So I also mentioned that in as much as what we see here is very simplistic, market just creates higher highs and higher lows and higher and higher lows. Within this, each of these push is called a swing, right? It's called a swing. So we have a swing low to a swing high, to another swing low to another swing high, right? But within this swing, we have internal structures inside. They are called internal structures or um, substructures. So they're basically just like tiny, tiny structures inside. So as this is going up here, we say this is an uptrend. Overall, this is an uptrend, but even within the structure that takes price from here to this point, it's an uptrend because it went up. So you're still bound to see, if you go to lower time frames, you're bound to see a bullish trend inside this upswing. You get right. So this is what you find in smaller time frames, and I said the smaller time frames build up to make up the bigger time frames. So this on this chart now, on the daily chart, if I should go down to 15 minutes, I'm going to see substructures within every daily swing. I'm going to show you on the chart, and today I actually just wanted to just show you guys extra chart examples, and that's what I'm going to do. So I just want to like prepare the groundwork for people who are not here during the morning live session. All right, so this is typically what we see. It's not a very, very good drawing, but it drives some the point. So you see from this high to this high, from this low to this high, you see this the substructure inside, right? And then at some point the substructure shifts. Okay, how do I change this? It shifts and tends to create what looks like a break of structure. So I said the break of structure is when the market is trending one way and then eventually it shifts. So instead of seeing higher highs and higher lows in an uptrend, it now shifts from higher highs and higher lows, and at some point it now starts printing lower lows and lower highs. We say that's a break of structure. And we mark a break of structure from the points where price violated the previous low. Because I said when you take a trade like this, your stop loss is going to be at the bottom of the previous low. Because if that trade is to be valid, price is not supposed to break below. Right? Hope that makes sense. So yeah, so the moment price breaks below, you say the structure has begun to change. It's beginning to shift, right? So that's what we call a break. So in this case, this is a break of structure. Price broke this. But now even the terms break of structure is subjective. Okay, it's subjective because we usually refer to break or we should usually refer to when the market shifts in this way as a break of structure when we're talking about the swings. Okay, so I think I should just hop onto the charts to just explain this. Let me use a neutral chart without any. All right, let me use this. I'll just go to this point. Okay, good example. So on the daily charts, so whenever we come onto the market, let's just we need to first thing we need to do is to spot our highs and lows. All right. So let's take this point for example. This is the high. Let me zoom out. This is the high. Price swung down, created a low, swung up, created a high. Overall, this is an overall high. Price came low, printed the low. So we can see lower low, lower high, another low lower than this previous low. So this is also a lower low. And then price came up. Here it seemed like it took out, it violated this point, but it still qualifies for a lower high, right? It still qualifies for a lower high. So this is a lower high, forms another lower low, forms another lower high. So typically what we are seeing is a structure that looks like this. Okay. All right. So this is a bearish market. It's a bearish market situation. All you want to be doing to make money is taking sales at these stops, target the previous low, stop loss wherever it should be. Price came all the way to the top again, took another sell here, stop loss. So at this point, when price came here, price had already broken. Let me zoom out. Price already created this low, so you're targeting this low, this low. Okay, you to take profits here, put your stop loss here. You're going to win this trade. So that's just how it works. Okay, and then what I was trying to explain was within these swings, within this big swing, you can already see the trend. The market created this. Let me zoom out. Okay, so the market created this low, this high, this low, this high, this low, right? So you see that within every swing, there's a substructure, right? And if the substructure, if the swing is going downward, the substructure is going to be bearish because it's also a downward trending market condition. Okay. So your ability to identify all of this just gives you an edge in the market because you're able to know where the market is headed from that point. All right. Um, so I'm just gonna what's this? Okay. So I'm just going to okay, so that's what we call a break of. So the break of structure in this case now is when the market kept doing this boom, 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 and what even okay, did this, did this, did this. This is giving me issues. Alright, did hold on. Market did this. So the structure. So let's mark our highs. You have this high. So all the way from this point here, you have this high, you have this low, you have this high, you have this low, you have this high, you have this low, you have this high, and then you have this low. Okay? But at some point, what happened? Price came up from here and broke above this point, right? It swung up and broke above this point. So we'll call this a break of structure because this is violating, like price has violated the original structure. It's supposed to be bearish, bullish engulfing. Sorry, lower lows and lower highs, but now it's not shifting from lower lows and lower highs to lower low, a new higher high. So this high is not higher than this high. So it has shifted from lower lows and lower highs to higher lows and higher highs. So you can also see that from this point it came down, but it never broke below this low. So this low is being respected. And then it created a new high. And from this point, it went up again. So this is what we call a break of structure. While a change of character, on the other hand, which was the second thing I talked about in the morning, a change of character is what tells you that the trend is about to shift, and it mostly happens in lower time frames. So when price was doing all of these bearish moves, right, the point where price now shifted, which is here, you can see that price left a sign. Price told us it was going to be shifting because this low that was formed, price broke it. If I'm going to use a line, let me just take this out. If I'm going to use a line, you can see that price broke this high here. And in this case, we call it a change of character. So basically, whenever you see the market starts changing, you're going to see a sign. Everything is just based on structure. Higher highs and higher lows being violated and changing to lower lows and lower highs. That's all you're going to be looking out for. All right. So I said I was going to show you more chart example. I don't actually think there's so much need for that. This was like some demo trade. This is a demo account, anyways. Yeah. So this is this. So I'm now going to talk about some extra factors to consider when you take your trades. All right, extra factors to consider. I mean, you have the likes of supply and demand. But I'm actually just going to talk about support and resistance first. So, as the name implies, the support is a price level that you that price rests on. The support for price. So price rests, comes down and rests on it. And what price usually do around support is that it keeps bouncing on the support. It's just like somebody who stays in a house, right? A house with let me I use this example in the live stream. A house with um oh, a house with a floor, right? That floor becomes the support. The ceiling becomes its resistance. So the resistance is now a level above price. That price bounces off. So you can see this is a support, this is a support, this is a support, and it's not a line, and it's a zone. So it's a zone. So this whole area can qualify for a support area, right? While the top is a resistance area. So price keeps bouncing between support and resistance. Okay. Then at some point it breaks down or it breaks upward, right? So that's for support and resistance. Now, this live stream is a few minutes in. So I'm just going to now show you something else. And this is going to actually increases your chance. This is actually going to increase your chance of winning every trade, right? I'm going to talk about the demand. I'm going to talk about discount and premium zones. So the idea of buying and selling in the market, because that's what you do in the market, you buy and sell. The idea of buying and selling, um, it's not just the fact that you want something, you just buy it. You have to wait or look for a vendor who sells this thing at a very cheap price. So when you buy for that cheap price, you make profits. Like you don't want to be cheated. Nobody wants to be cheated. Okay, so we have what we call discount price and premium price. So the premium price is a price that is too high, while the discount price is a price that is quite low. You are already familiar with this language. So what we do is to identify these points, and you always want to buy at the discount price. I mean, even in real life, you want to buy at the discount price, right? So in the market, it's the same thing. You buy low, sell high, right? So what you do here is that how do you identify these points? You take your Fibonacci tool. There's a tool called the Fibonacci tool for those who don't know what it is. And I had already set my own to just show me a line that represents 50% of that move. And the discount price is just dependent on both these prices. on both this so let me just below the 50% line is your discount price. Above is your above is your premium price. Let me just and then all right. So you always want to take your trade from price is always going to price is always um come down to a discount price because the people who are actually pushing these markets they put in so much money. So the same way you want a discount is the same way they want a discount, and a discount for them like chocolates of money, basically. So what you want to do is, in as much as you're following market structure, you are not just going to take your trades whenever you want. You actually just you have to look for the discount price. So I'm going to explain what this means in a second. This is the daily. Let me go down to the H4. H4. Okay. I don't know why the network is acting up. I don't know why. I don't know why. Mm. Right. So H4 structure. Let me look for a typical bearish market. Like this, these are all bearish market conditions. Well, let me look for something less. Okay. So let me use this. Let me use this. So normally when you want to analyze the market, you have to start from the higher time frame to get an idea of what the market is doing. If you've already watched my video on time frame analysis or multi-time frame analysis, you understand what I'm saying, right? You always want to start from giving this analysis based on this time frame just because I'm trying to drive home a point. All right. So when the market makes from this low to make this high, okay. So at the point where it's going to come down to form a new low, it has to form that it has to stop like it has to seek a discount price. So if you draw your tool from the beginning of this move to this move, you don't want to take your trade anywhere above this point because this is premium while below is a discount. So you can take your trade from here. You can take your trade from here. And hopefully your stop loss is not too close. And then you just target upward. Right? Because this are the discount price. Right? And then when the market pushed upwards, as in this case, the market pushed from here, right, to here. So this is a swing low. This is a swing high. I think this was just because of news, because look at the candle. The rejection is actually so much. So what you do is you look for the next low, look for the next low, drag it to the next high. Boom. Price is always going to want to come down into the discount price. You can't be taking trades from here. You have to wait for it to come into the discount price. So this live stream is actually going to cut short. It's going to be quite short. This is just um 34 minutes, and I spent very little time talking actually. But I'm just going to end this here, and tomorrow I'll be talking about supply and demand, and how this all comes together to help you, trade the market, right, with more precision and accuracy. Okay, so I'll just see you guys there. See you guys here tomorrow. Do well to share this information to your friends. Like, send them a link or tell them about this YouTube channel. Tell them about this broadcast that I'm doing, so they can benefit. You get. It's not only about like trying. It's not only about trying to make money. If you have a sibling, like I always say, you're going to spend this data and this time on social media anyway. So why not just spend it on something that you know on something that just empowers you in the long run. All right. So I'm talking about supply and demand tomorrow, and I'm going to, and as this broadcast progresses, you're going to be finding ways in which you can, you know, which is going to get easier. So your precision is actually going to be increasing as you keep going on. All right. So thank you all for being part of this live. And I'm going to be signing out right about now. All right, guys.